A strong US dollar offers both benefits and drawbacks. While some people gain from it, others suffer. In today's video, we will learn about the various pros and cons of a strong dollar. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex and many more. So watch this video till the end and hit the subscribe button and click on the bell icon to get notifications for our future videos. So let's begin the video. When the dollar appreciates against other currencies in the foreign exchange market, it is said to be strong. A stronger US dollar makes it possible to purchase more foreign currencies than before. For instance, a strong dollar helps Americans who travel abroad but disadvantages international visitors to the United States. At the end of 2019, the Invesco DB US Dollar Index Bullish Fund, UUP, had increased by about 4% for the year. A basket of significant international currencies, such as the euro, Japanese yen, British pound, Canadian dollar, Swedish krona, and Swiss franc are included in this exchange-traded funds index, which measures the value of the dollar in relation to those rates. Advantages of a strong dollar. Traveling abroad is less expensive. American citizens with US dollars have more purchasing power abroad since those dollars can travel farther. A strong dollar can buy more items when converted to the local currency because changes in US economic conditions have little impact on local prices in other countries. If expatriates still possess dollars or receive dollars as income, their cost of living will likewise decline. Expatriates are American citizens who live and work abroad. Imports are less expensive. If the value of the currency used by the manufacturer declines relative to the dollar, goods produced abroad and imported into the US will be less expensive. The monetary value of high-end European vehicles like Audi, Mercedes, BMW, Porsche, and Ferrari would all decrease. A luxury car from Europe that costs €70,000 will cost $94,500 at the current exchange rate of $1.35 to the euro. If the exchange rate drops to $1.12 for every euro, the identical car that was previously selling for the same amount of euros would now cost $78,400. Import costs will continue to decrease as long as the dollar remains strong. The price of other low-cost imports will also decrease, giving American consumers more disposable income. Companies in the United States that import their raw materials will have reduced overall manufacturing costs and higher profit margins as a result. Benefits of international business in the United States. Investors and foreign businesses with significant U.S. business will profit. Gains in the value of the dollar will translate to gains on the balance sheets of multinational firms with significant U.S. sales and profits. These companies' investors ought to receive compensation as well. Status as world reserve currency is bolstered. A strong dollar supports the dollar's position as a global reserve currency. Although some nations, such as China, Iran, and Russia, have questioned the US dollar's role as the de facto world reserve currency, a strong dollar helps maintain the demand for it as a reserve. Disadvantages of a strong dollar. Traveling to the US is more expensive. With a higher dollar, foreign visitors will discover that American goods and services are more expensive. Business travelers and foreigners who live in the US but maintain bank accounts in their home currencies or receive paychecks in those currencies will suffer, and their cost of living will rise. Exporters suffer. Domestically manufactured items are comparatively more expensive abroad, just as imports are less expensive at home. With a dollar to euro exchange rate of 1.35, a $30,000 American-made car would cost €22,222 in Europe. Nevertheless, when the dollar strengthens to 1.12, it rises to €26,786. Some have suggested that pricey exports may result in the loss of American jobs. U.S. businesses operating abroad are hurt. Companies with headquarters in the United States that do a significant amount of business abroad will suffer as the value of the revenue they generate from international sales will fall on their balance sheets. Investors in these businesses are likewise probably to suffer. Philip Morris International Incorporated, PM, and McDonald's Corporation, MCD, are well-known examples of U.S. businesses having a sizable portion of their sales coming from abroad. Although some of these businesses employ derivatives to protect themselves against currency risks, others may only do so partially. The impact on emerging market economies is negative. Foreign nations that need U.S. dollar reserves will ultimately pay a disproportionately higher price for those currencies. Particularly in emerging market economies, this is crucial. Special considerations. According to economic theory, currency swings will eventually return to the mean because the desire for cheap imports should cause their prices to rise. As the demand for these goods drops globally, pricey domestic exports will also have to decrease in price until, at some point, an equilibrium exchange rate is achieved.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.